Hi everybody, Wagner Nolasco here today. We are recording a YouTube video and podcast for Wagner Nolasco and B2R Direct. And today I have a very special guest. His name is Bill, because I call him Bill, but his name is William Frederick Sholz. He's a personal friend of mine for decades. This guy is amazing. He doesn't talk much about himself, so let me do the intro for you. Bill is an old friend, as I had mentioned. We serve as volunteers in the United States Coast Guard. Bill was my boss for several years on the Coast Guard, but most important is he is a person that I admire tremendously by his accomplishments. What are those accomplishments? Bill was in Wall Street for a long time. He was one of the key persons for Gabel Investment, managing over $35 billion and having a lot of institutional countries, cities. He actually did a lot of investment for them. I'll let him talk a little bit about his past. He has an MBA from Harvard. He's one of my personal advisors. He sits on my board, and he sits on a lot of different boards from a lot of different trusts, funds. And today we're going to have a little bit of a debate of stocks, bonds, and real estate. And you from home are going to decide who is going to win, right? We're only going to give you facts, what we believe to be true, and we'll figure it out. We'll see what happens, right? Anyways, Bill, welcome.
I'm here. Thank you. It's good to be here.
Thank you, my friend. Well, we have a lot of listeners, Bill, a lot of people that like us, people that are just getting to know us. Tell us a little bit about yourself. Who is Bill, or William Frederick Sholz, per se?
Bill is 30 years on Wall Street, born in Lima, Peru, Peruvian mother, American father, and proud father of a 21-year-old daughter who's going to Kauai in May.
Wow.
For vacation, for her 21st birthday. Yeah, her grandmother paid for the trip, so it's very nice. So she's very excited about that. So I talk to her every day to make sure she's got everything she needs for her Kauai trip. So my background really was in investments, and I spent a lot of time on Wall Street, as I said, doing portfolio management, securities analysis, and sales. I also raised money for the firm that I worked for. Yeah, so it was a lot of fun, but it was all institutional. We had very few individual investors.
Fantastic. When you mean, give us a little flavor about institutional. Who are they?
Institutional. Okay, so my biggest customer was AT&T.
Okay.
They started us with, they started investing with us with $250 million in 1993. And by the time I left firm in 2007, I think it was over $1 billion.
Wow.
Yeah, they tend to look at numbers very carefully. They're not moved by friendship or by undefinable things. They look at how you perform against your benchmark and how you perform against other money managers in your same category, your peer group.
I know you also represented a lot of different countries and states. Can you give us a little bit of flavor on that?
Just a couple. State of Wyoming was one of my clients. The Republic of Palau in the Philippine Sea was a client also. Saipan, the Commonwealth of the Northern Mariana Islands. That's 26 hours by air from New York. You have to go through Tokyo and Guam, and then finally to Saipan. By the time you get there, you have to sleep. Yeah.
Is it? If you're watching us on YouTube, you can probably see Bill is a very good-looking guy, but he has a lot of miles under his belt, air miles, and also a lot of capital that has been raised. I was not going to say that, but you did it. You look like you're 50, Bill. So good for you.
I survived. Right.
Yeah. So this is really to show you how big of a caliber of a person that Bill is. He's a philanthropist. He's a volunteer by heart. He's also somebody that I have the highest level of respect because his past actually dictates his actions today. And today we're going to be talking about stocks, bonds, and real estate. And I don't have to show you what my shirt is. I'm the real estate guy here today that's going to be talking about real estate. And Bill, I know you have finally found Jesus and got out of Wall Street.
Yes.
And that for me is a big deal because I really believe in Main Street. I believe in mom and pop investors. Yes. We actually own 98% of all single family for rent inventory in the U.S. Very proud of that. And I really believe in giving the power to the people. I don't believe in giving the power to the banks. I don't believe giving the power to the Fed, giving the power to the government so they can control our lives. I really believe people should be entitled to rent their properties, buy properties, no rent control. It's my property. I'll rent it for whatever amount of money I'll do, but I know you come from a much more established and round environment, which is the stock market, the Fed, the bond market. So let's just get started. Well, tell me a little bit about the economy, how it is today, and what are those items? What do they look like?
Okay, well, some news just came out this morning, like a half an hour ago. The inflation rate for March came out at 8.5%. That's the highest since, let's think, it's 40 years, the highest inflation rate in 40 years, which is unbelievable. Last month, in February, it was 7%. Wow. So it's jumped 1.5% in 1 month.
So what I have to say about that is I chihuahua. That's it. There's no comments, right? We're having inflation. Everybody knows. Unless you're a person that don't even do your shopping for your grocery, you have a sense of reality. You know that when you go to the supermarket, you go to the grocery store, you go to the gas station, you go anywhere, everything costs more now, and a lot more. The other day, Bill, I was driving and I stopped at a gas station. I have an electric car, but I also have a pickup truck, I love pickup trucks. And I looked at the price of gas and it was almost $5. I thought I was in California for a minute. And I'm like, hey, no, I'm in Florida. But gas prices are just through the roof, over 32% this year alone. And Bill, tell me, what does that mean to bonds, stocks, and real estate when you have an inflationary period or time in the market?
Inflationary environments, never good for investments. You have to struggle to find companies that do well in bad environments. There is an interesting, and speaking of bonds specifically, and thank you for opening that Pandora's box, because bonds usually have a fixed rate of return. There is one bond in particular that a lot of people don't know about. It's called TIPS, Treasury Inflation Protected Securities, TIPS. The yield on the bond changes to reflect the inflation rate. So if the inflation rate goes from 4% this year to 8% next year, the yield on the bond, what you get paid. Last year they paid you 4%. This year they're going to pay you 8%.
Wow. So I think that's a good thing if you invest in bonds. There's only one thing here that I have to probably just put out there. I'm not going to give you the answer, but I want you guys to think, because you're always smart people. You're all educated investors. Well, the bond is only as good as their international credibility. And we all know that real estate and bond and stocks, it's all about supply and demand, right? If people don't want to buy that bond, it doesn't matter how well it pays, because you lose international credibility, especially on the bond market. When you're talking about a bond that is issued by the U.S. government, it used to have a lot of credibility. But we all know that lately, internationally, the U.S. bonds have not done so well, right? So our biggest client, China, hasn't even been that interested in our bonds. So what does that mean, Bill, internationally for the market if the U.S. continues to actually try to sell bonds and the market doesn't absorb them?
Well, generally when there's low demand for a bond, the yield goes up because it's harder to sell it, so they have to pay you more to hold the bond. That's how they interest people in buying the bonds.
Does that mean more inflation?
Yes.
Okay. I will give you my 2 cents on real estate and how I would react to this, right? How would you like to have borrowed $100,000 in 30 years ago, let's just say, and repay that $100,000 on today's money for a fixed interest rate for 30 years? What do I mean about that? It could actually, and historically, I just saw it on MLS today and I did some prior research. You could buy a 4-bedroom, 2-bedroom house in Dr. Phillips, Florida, in Orlando, in the greater Orlando area, which is one of the most prestigious areas. You could buy a 5-acre lot and a 4-bedroom, 2-bedroom house 30 years ago for less than $100,000. $100,000. The same house today, if you had obtained $100,000 loan, even if you have 100%, if you're a first-time home buyer, you only had to give 3% back then. Today, you would actually be repaying $100,000 with a fixed interest rate in an asset that today is worth only the land. I'm going to give you two scenarios. So the land, we have a piece of land right here near our office for sale, which is actually 3.2 acres for $4 million, only the land, and it has an old house on it. But a house on a 5-acre piece of land in Dr. Phillips, Orlando area on today's market, you're probably talking about a $6.5 million asset. So if you had purchased that asset for $100,000 and you were repaying $100,000 throughout 30 years, is that a pretty heavy leverage against inflation, you think? From $6.5 million to $100,000? So this is the power of real estate. If you could borrow money on today's day with a fixed interest rate for 30 years and you can repay the same amount of money with a fixed interest rate in 30 years, would you do it or not? Is that a smart purchase or not? I'm just going to use something that a person that I really admire, and I know Bill was one of the first adopters of Berkshire Hathaway stocks back then. Warren Buffett has said, if I could get Fannie and Freddie, if you're not familiar with Fannie and Freddie, just Google it, what kind of loans they are. If I could get Fannie and Freddie loans that are subsidized by the federal government, I would buy a couple 100,000 houses. The good news is this: every American with good credit and employment can buy up to 10 houses with Fannie and Freddie. What does that mean? Lower interest rates, locked for 30 years, right? So, Bill, is that a pretty hefty leverage against inflation?
Huge. Real estate is one of the best hedges against inflation.
How would you actually debate that with me on bonds?
I would probably lose that debate.
Well, you can't win something you haven't started. So if you have no argument, can I have some applause there? Where's my applauses?
Yeah.
I'm telling you, this is so much fun. Let's talk about stocks. Historically, what is a stock? Because I speak plain English. I don't like to be very sophisticated. I like to speak the English that everybody understands, even though English is my second language, so I'm not very good at it. But Bill, tell us a little bit, what is a stock market? What are stocks? What are they good for? And what do you foresee on the stock market on the current market situation, which is an inflationary market right now?
Well, trying to predict the stock market is very difficult. It's like trying to predict weather. You don't know short term what's going to happen, but long term, I can tell you the S&P 500, which are the 500 companies that represent the U.S. economy, since 1928, when they started keeping track of this index, has gone up approximately 10.1% per year. What does that mean? Well, using the rule of 72, that means that you double your money every 7.2 years. But if I was going to buy an individual stock, instead of buying the S&P 500, I would own the stock that you just talked about, Berkshire Hathaway, because that stock, even though the A shares are $380,000 a share right now, actually I think they're $570.
How much did you pay for it?
I paid $3,000 back in 1987, but now they're $580,000
for one share.
For one share, but there's a baby Berkshire that I was just telling somebody in the car this morning, because they were asking me the same thing, advice. I said the baby Berkshires are selling for about $350, $360 a share. That's 1/50th of the value of the A shares.
Right.
So they're available to the smaller investor using BRK.B, Berkshire.
Let me just say that Warren Buffett is one of the smartest guy I know, and Bill is probably the second one. And the reason why he's so smart is because he doesn't invest in he doesn't invest in stocks. He invests in companies. It's very, very different when you invest on a stock that you don't know who is managing it, what company is actually leveraged on, how are their financials, are they true what they're actually disclaiming, and can they manipulate what they're saying? Warren Buffett invests in companies and usually are consumable products. Insurance, Gillette, foods, RVs. He usually invests in products that he actually consumes. And Coca-Cola. He usually invests in products that are actually based upon business experience, business management, and actually the high level sophisticated number understanding. And actually the way he does it, it's absolutely phenomenal. He knows how to understand companies and businesses. That's why he's successful. He does not invest in the stock market. He invests in companies. It's a total different scenario. Bill, how does that real estate market relates to stocks, and what's your personal opinion on that?
Well, generally speaking, people who invest in the stock market frequently ask people who are investors, how do I diversify? What do I own instead of just stocks? Because they get nervous when they see the stock market drop. And you can tell them that owning real estate, particularly their primary residence, is a great diversification. Secondly, if they want passive income, buying homes, for example, the industry that we're in here, the build to rent direct, where you can buy a package of 5-10 houses.
Yep, we can customize it for you as much or as little as you need. From 1 to 200, 300. We just sold one development, 256 units for one investor, which is actually a non-institutional investor that end up creating a group of investors. That's and amazing. They acquired 256 units for cash flowing purposes. So as I had mentioned before, it's very powerful.
Yeah, so there's a perfect example of diversifying away from the stock market. And it's the disadvantage, it's not liquid. The advantage is, it's always going to be there. They're not making more land.
You're right. That's what I heard. God is not making any more land.
Except in Hawaii, where what do you call it? The volcano is spitting out more lava. But nobody lives on lava.
Or in Dubai, when they're creating the islands and the palms and everything else.
Without those two exceptions, they're not making any more land.
The way I would actually state to you guys why do I prefer real estate versus stocks is very simple. Stocks could not be leveraged. Well, let me just rephrase this. You can leverage stocks up to 50%, but if you have a margin call or if you have any change on the current scenario, economical scenario on the country, you actually will have to pay those differences quite quickly, usually same day or the same time. If you don't have the capital, they will liquidate your stocks immediately to take that margin call and get their money back because you're leveraged. So stock is very limited leveraging, and you do pay a high price for it. Now, real estate, on the other hand, so with $1 million, you can buy $1 million worth of stocks on today's date. And this is if you're not willing to gamble and leverage your portfolio, because a margin call can happen and it will happen. It's not if, it's when. But on real estate, on the other side, that's how I would argue, is with $300,000, I can buy $1 million worth of real estate on today's economy, and I can leverage that with a 30-year fixed. What does that mean? The only country in the world that has a 30-year fixed, a true 30-year fix, is the United States of America, the best country in the world. You guys that are born here, that are actually living here, maybe you don't understand how powerful that is, but the debt sometimes, and probably we can go back because we're getting a little bit more of a gray hair, the debt sometimes more powerful than the asset. I remember when assumable mortgages were the icing in the cake for you to make a purchase. So what does that mean? Leveraging $300,000 can buy you $1 million of real estate. Usually it's 30% of that amount. So keep that in mind. You actually have a 30-year fixed loan included on that real estate. You also have cost segregation and bonus depreciation, which you don't have it in stocks. What does that mean, Wagner? It means that a very intelligent group of people, engineers, CPAs, came up with a plan that the IRS on residential buildings, they allow you residential units, they allow you to depreciate in 27.5 years. Well, a carpet doesn't last you 27 and a half years. A drywall doesn't last you 27 and a half years. An air conditioning unit doesn't last you. A roof doesn't last you 27 and a half years. The only thing that will last you 27 and a half years is your lot, is your land. So for that reason, the IRS won't let you depreciate the lot and the land. But with the accelerated depreciation, and bonus depreciation on top of that, I can usually depreciate my properties between 11 and 13 years. What does that mean? I don't pay taxes on all the income that property produces. Well, if you get dividends from a stock, you're going to pay a lot of taxes, right? In real estate, if you're smart, you can pay capital gains, or you can do 1031 exchange, which is a kind-like exchange. So if you think that very, very powerful people like Robert Kiyosaki, and I'm not talking politically here, Donald Trump, even Warren Buffett, a lot of the big brains in this country, they don't pay any taxes, and the reason is because they utilize all the tools given by the IRS. So I don't care if you like stocks, it's your personal preference. What I'll tell you is this. In my personal opinion, I'm going to see if Bill can trump that one. How can you leverage yourself this much with safety? How can you actually get all the benefits that real estate can get in a stock or bond scenario, Bill?
That's a very good question. Stock futures allow you a lot of leverage, but there's also a lot of risk. I believe the risk in futures is considerably higher than it is in real estate. It's extremely volatile. You need to be very well informed. It's a thin market. You can control a lot of assets, total assets in the stock market using futures, using stocks themselves with buying them on margin. You can only control a fraction of what you can control with real estate. So real estate has more leverage, and it's safer.
All right, that's what I wanted to hear, because maybe you're a gambler, because there's a big difference between gambler and investor, and I want to tell you. An investor is somebody that invests, especially in real estate, it's a long-term investment, right? Real estate is a team player, and everything matters. A gambler is somebody that puts the money where everybody's heading and expects a good outcome. Well, let me tell you something. If everybody's heading one way, you should go the other way, because usually, smart people are not there anymore. They already, took whatever they needed and left. I just wanted to say that this is no winners or losers. I'm not saying real estate is better. I'm not providing any kind of a financial advice to you guys. I'm just relating to you what I invest in and why do I believe real estate is so powerful. So some of the points I would like to end this, and you're going to make your own decision today. Bill, give us some high notes and some low notes of stocks and bonds. And I'm going to do the same for real estate, and we'll let the listener make their decision. What do you think about that?
Of course. So high note with stocks is knowing that you can own the industry by buying an index fund. So you basically will control 500 companies, own interest in 500 companies through the S&P 500 with a small investment. You can invest in stocks with much smaller amounts of capital than you can invest in real estate. Literally, a $100 investment for most mutual funds. A low note, we know that the stock market is extremely volatile, and a lot of people get very scared when they see the volatility in the stock market, and they usually sell at the bottom. So that's a high and a low. Oh, and the other thing is you're allowed to invest with Warren Buffett by buying his baby Berkshires, the BRK.B. I own those. Great company.
That's fantastic. That's some of the highs and the lows of the stocks and the bonds for you guys. I'm going to give you some of the highs of real estate. The number one, people ask me all the time, Wagner, can I invest in real estate without any money? And the answer is yes. You cannot buy stocks without any money. You can buy real estate without any money. And I have. At one point, I didn't have any money, but I had a great property. I had a great opportunity. I had great credit. I found an investor that had the money. He placed the money, I placed my credit, I placed the opportunity. We partner up and we succeeded in purchasing their property. So there is ways of you to buy real estate without any money, which no other market or no other product in the market is available. Second thing is this: hedge against inflation, right? You can hedge on today's prices, in today's money, in today's interest rates for 30 years. Nothing that I have been aware of it throughout my life will give you that power. The third and most powerful is passive income and cash flow. The first of the month is the first of the month in Japan, in Paraguay, in Brazil, in the US. You can be in the Bahamas. You can be in Ibiza. You can be in Monaco. You can be in Mexico. That rent is going to get due. And when it gets due, your bank account looks like this. If you're looking at me on YouTube, fat, chubby, just like you ate a lot of McDonald's. Because the first of the month is the day that all the positive cash flow comes in. And what that will do for your life in real estate, which I have experienced, will give you the freedom to do whatever you want, whenever you want. If it's Monday, Tuesday, Wednesday, it doesn't matter. If you want to retire, if you want to put your kids through college, if you wanted to go on vacations, you just make the decision because you're generating wealth. And wealth means passive income. When something works for you and your money works for you, you don't have to work for it. That's the power of real estate. That's why 90% of all millionaires and billionaires in the US were made by real estate. Because not only you build positive cash flow, positive income on a monthly basis, you build equity, you build appreciation, which is, it can happen, it may not happen, but historically it has. So it's powerful. It's a real asset I can touch, I can visit, I can leave it to my kids. And I have, if I plan it correctly, you have very little inheritance taxes as well, if any. So get a smart CPA, get a smart attorney, get a smart real estate agent or a company that you trust. If you don't feel comfortable investing in Florida, don't buy from us. Not selling you anything here. Most important is go out there, take action, buy something, do something with your life, get out of that rat race of the W-2 job, create financial freedom, create passive income for yourself. Bill, thank you.
Thank you.
My brother, I'll tell you what,
this.
I learn so much from you every time, so I really appreciate what you do for us.
From you too.
Thank you very much that you're listening on your car right now, working out, on your job. Share this video or this podcast with family and friends. If you think this is a positive podcast, share it. Send us ideas. We really appreciate you being here today. I'm Wagner Nolasco, and we really appreciate. Have an amazing day. Go out there and make your success story starting today. You can do it. I did it. You can do it. Take care. Have a great day.